QuickBooks Pro Desktop 2021. Loan Manager, generate checks and bills. Let's get into it with Intuit. QuickBooks Pro Desktop 2021. Here we are in our Loan Manager practice file. We currently have the open windows open. You can open the open windows by going to the View dropdown, selecting the open windows list. In prior presentations, we set up a loan, put that loan on the financial statements, and then set up the Loan Manager to be tracking the amortization table and help us out with the payments on it. Let's first take a look at the balance sheet by going to the Reports dropdown, Company and Financial, and on down to the Balance Sheet Standard. We're going to change the dates. Let's go to the Customize up top from 01/01/20 to 12/31/20. And then I'm going to say OK. So we put this loan on the books here. We're going to say it started in January and now consider some payments. Now, when we make the payments on the loan, if I go back to the home page, you could typically pay them either by making a check or some kind of check which would decrease the checking account. It could be an electronic payment. We would still use basically the check form, or we can enter a bill, which would be a similar kind of format, and then pay it at some future point in time. If I was simply to write a check to pay off the loan, then I'd have to write to the check and then tie it out to an amortization table. I'll take a look at it. I won't actually post the check, but we just want to compare and contrast doing it this way with the Loan Manager. So if I was to pay this thing off, I'd say the first payment, according to my schedule here, would be this item, payment number 1, and I would be entering the date on 01/01/01/31, I should say, 20, and then I'm going to say the payee is Bank 1. And then the total amount of the payment will not change. That will be the easy part, 1132.27. So this is going to be 1132.27. But then we'd have to break out between two components on the other side of things. One, decreasing the loan. So this would be the loan is going to go down. For this particular loan, it would be going down by the 882.27. 882.27. So this will be 882.27, and the other side would be going to interest expense, and that would be the 50. Now, the 250. Now, the thing is that this would typically be a memorized transaction, but these two numbers will change from period to period, because if I go to the next period, these two numbers are going to change. That's the problem here, and it's not too bad to deal with if I have the amortization schedule. But it's a little bit difficult if I want to delegate this to basically somebody else. I gotta have that added step of saying, now you gotta change this every time you write the check. One way we might deal with that is with the Loan Manager. So if I close this back out, instead of doing it this way, I'm gonna say no, don't record that. I'm gonna record it with the Loan Manager, and then once we do it with the Loan Manager, we might then tie it out to something like the bank feeds. So when something comes in with the bank feeds, it's just going to know the cash amount. But so if I can just tie out that cash amount, match it to either a bill or a check, then that'll be a more efficient way to work with the bank feeds, and I can enter it on our side. So we can use the Loan Manager by going to the Banking dropdown. We're going to go to the Loan Manager. We set up this particular loan. So we have the loan set up. It all lines up. Here's the information for the loan. We did that last time. Now we have our payment schedule over here. And I can then just say, okay, if it's on the first payment, I'm just going to start paying these off, and it'll basically remove these items as I pay them. And if it's all set up nicely, it'll work well. Now we can either make the payment in the form of a bill or a check. Let's go ahead and set up a payment. So we're going to say set up the payment. And now if these amounts are wrong, you can adjust them, but if they're wrong, you probably want to edit your whole table to kind of fix it so it'll be lined up, because the whole point is this should make it easier for these two to line up. These two amounts then line up to the two amounts we just looked at for the first check, 822.27, and the 250 for the full check amount of the 1,132.27. If there's any fees, you can add that, and so on. This is the first payment, and that should line up. The first payment's got to kind of line up because that's what we're on here. So if it's not the first payment, you probably want to change it in the editing section here to put it on whatever payment you are on. We'll take a look at that in a future presentation. Then you can either write a check or you can enter a bill. Now, either of these could be useful. If you're just writing a check and you actually want the physical check to be paying out, then obviously writing a check would be good. If you're tying this out to a payment that had already been made, like an electronic type of payment or something like that, then you can use either one. You can write the check. If you're actually doing this as a system to tie out to either the bank feeds or just to reconcile, and you have an electronic type of payment with a bank reconciliation, again, you can use either one within that system. We'll start off with the check. If you use the check, then what'll happen is the check hasn't been cleared. It hasn't cleared the bank. So the way you can clear the bank is either you do a bank reconciliation and you'll clear it at that point in time if the electronic transfer basically happened already, or when you do the bank feeds, the bank feed will come in, and instead of recording the transaction at the point in time the bank feed goes through, if it's an electronic transfer, you tie it out or match it then to this check that had already been made. You could do the same thing with the bill, however, too. So we'll do the same process with the bill and the second payment. So I'm going to say, okay. It'll generate our check, the same kind of thing that we did last time. It just basically generates it automatically, which is nice. I do have to change the date because it's going to print the current date here, and I'm backdating this to 01/31/21. And so there we go. So now it's going to decrease the checking account by that amount, decrease the loan amount by the principal portion, the $882.27, and the interest is going to be basically the rent on the loan, the $250. If I say save and close, okay. And yes, and let's check it out. Go into the balance sheet then. In the open windows balance sheet, I think I entered in 2021. I think I got to change the date. I'm going to double click on this. I'm going to change the date up top to 2021. And then I'm going to change it back to 2020. So I'm going to double click on this item here. I'm going to go back into it and change the date back to 2020. That's where we're working in. So I'm going to say save and close, and yes, and close this back out, and no. So there we have it. Now it's at the 59,117.73. That should tie out to the amortization table here. It should also tie out to the amount in the loan manager now. So if I go back into the loan manager, 59,117.73 is going to be the amount up top, 59,117.73. We now have the second payment. The first payment disappeared, so we're now on the second payment being slightly different. Let's imagine a month has now passed. We're going to generate the second payment, but this time we will do so with a bill rather than a check. So I'm going to set up a payment for the month 2, and it's going to be a regular payment. These amounts now line up to the second payment. If we were to look at our amortization table, interest $246.32, loan reduction $885.95. So that looks good. And so this is payment number 2. So I'm going to say, okay, generate the check. So actually I generated a check here. So we'll do the check one more time. I'm going to say the check is going to be as of 02/28/21 or 20. Let's do it right this time. And then I'm going to say save and close. I'm going to record this as of the end of the second month. Another check. I didn't do it with a bill. I did it with a check. And if I go back to the balance sheet, there it is. If I double click on the loan balance, then now we've got these 2 checks that happen on a monthly basis. We're down to the balance of the $58,231.78. That's going to be after the 58 after the second payment. So it should be 58,231.78. 58,231.78. There, that looks good. Closing this back out. And then in the loan manager, 58,231.78 should now be the amount remaining here. That looks good. And if I go to the income statement, reports drop down, company and financial, profit and loss standard, changing the dates up top from 01/01/20 to 12/31/20. We have the interest, the 2 interest payments for the 2 payments that have then been made. Let's do another one. Let's do the third payment now. Back to the loan manager. This time I'm really going to do it with a bill. So I'm going to set up a payment. And instead of having a check down below, I'm going to set up a bill. Obviously, once you set up a system, you're probably going to stick with it. But the bill can work well too, because this will record the same transaction, except that instead of decreasing the cash, it's going to be increasing the accounts payable. We can then manage it and pay it at some future time with the payable, billed payable, or we can match it still to like a bank feed. So let's check that out. So I'm going to say, okay, generate the bill this time. So now something went wrong with the bill. It didn't generate the bill. I think it's because I don't have a vendor there, so I'm going to go back into it again. But I have this other problem now that it went to payment 4 now, and I need to bring it back to payment 3. So if you had to delete the check or something like that, how do I get back to the prior point? What you can do is you can edit. You want to edit the loan details. And then if I go to the next tab, it's now on 4. I'm going to go to 3 payments now. It's on the 3rd payment, so I'm just going to change that back to 3. And then I'm going to say, okay, the 3 is back. So now I can make that payment. I'd like to generate a bill. I don't think I can do that because I set up the loan as an other, kind of, instead of a customer, vendor, and other, I set it up as an other. And I think you need a vendor to apply the bill. So what I want to do to test this theory, I'm going to set up a vendor. So I'm going to go up top. I'm going to go to the vendors and vendor center. And then I'm going to set up a vendor called vendor bank number 1. So if I double click on this, you can add a new vendor, which is going to be bank number 1 vendor. So I have a different name. If I close that out, you add a new vendor by going to the vendor drop down and new vendor. So now that I have a vendor in there, I want to go to the loan manager. I want to make sure to close it first. I'm going to close it out so it can refresh. Then I'm going to go back into the banking drop down, loan manager again. And then let's check it out. It should be refreshing. Then I'm going to say, let's see if we can go back into the edit the loan details item. And then now in this drop down, I have an option to pick up the vendor. Now this won't line up perfectly because now I made the payments to the other account with the other that wasn't a vendor but set up as other. But now I should be able to enter a bill. So I'm going to say, okay. So now it's going to that vendor. Let's see if it'll let me generate the bill now. So I'm going to go to the payments here. So here we are on the payment side, and we're on payment number 3. So that looks good. Now I'm going to try this again and add a payment. Set up a payment. So it's the payment. We're on payment number 3 here, and it's 889.64 is the principal. Does that tie out to our payment number 3? Yeah, 899.64. That looks good. And so it's going to make a bill. Let's see if it does it this time. I'm going to say okay. Now it generates a bill. So if you want to use the bill function, make sure when you set up the payment, who you're paying it to, that it's a vendor and you don't set it up as other, even though it's like the bank, so which is you don't typically think of as a vendor. So I'm going to make up the bill. This time is 033120 is going to be the bill amount. And then we have the same detail down below, breaking out for the 3rd payment between the principal and interest. And this time, however, it doesn't decrease the checking account, but instead increase the accounts payable account. It's going to increase the accounts payable account. So let's save it and close it. Check it out. So I'm going to say yes. And this can work good in a system if I'm going to close this back out now, close this back out, close this out, and then I'm going to go to the home page, because then you can manage, so you can enter it, you can enter the payments, and you may even like go through the whole thing and enter all the bills, right? I can go through multiple of them and enter them as bills and then manage them when they're going to be paid over here. I can sort them as they're going to be paid. I can also match the bill if they're going to basically be paid on bank feeds automatically as well, so I can use that same kind of matching system. And so notice you can kind of line them up here for the year. I mean, if I went through that whole system and I went through the loan manager again, banking drop down, loan manager, and I was to basically enter the bills for the whole, like year's worth of payments, I could say set up another one, set up another bill, and then I'm going to say that's going to be bill number 4, enter that, and this will be as of, I want to pay this on, this is going to be 04/30/20, and you got to be careful on the bill date and the due date. So if it's due on that date, you might want to say that it's due 04/30/20 on the bill date, so that you could sort it when you sort the bills then. And then say save and close, and okay. And then if I just keep doing this, I'm going to say set up another payment, and I'm going to say this is payment number 5, and I'll say this bill is on 05/31/20, and then 053120, and then save and close, and OK. And then if I then go to my home page and I look at the pay bills, then I can start to basically sort these items. I could sort them, show me when the ones that are due at this point in time, or show all of them, and then I can sort them within here and just pay them out of the accounts payable. And then I don't have to worry when I make the payment, the breakout. I don't have to go back to the amortization table here and worry about, the breakout. I've already got them in place. And again, if I do the bank feeds right now and I do it all at one time like this, as the bank feeds go in, it should match up the bank feed to this payment and not have any problem with us having to break out at that point in time either. So that could be a nice method to use with the help of the loan manager.